and a lot of these celebrities and their teams have pretty short attention span, or pretty short, I guess, memories when it comes to the sorts of products that people are willing to advertise. So I mean, we were talking before the show basically about how the Kardashians are still shilling all of these different supplements and stuff, and they're not the only ones who kind of don't really care about who they're associated with as long as the money's there. So I don't think that this entire industry of advertising for crypto is going to disappear in the future. But one other thing that is a completely unrelated thing that this brought to mind for me is just the fact that Terra, the very collapsed crypto stablecoin thing from yesteryear, it feels like so long ago now, is still a sponsor for the Washington Nationals because they signed a 5-year deal at I think like $40 million. And there's some behind the scenes drama there about like the Nationals not wanting to give that money back. But there is some irony around like we pick who we want to be angry at. So, Larry David is getting sued for
break down the top crypto news stories, and we have some fun ones today. Who is taking it away first? Will, I think you got us with some Tom Brady news at the top of the show.
Yeah, I don't know what to call this. Like, is it a thought piece? Is it like a memoir? Is it like, I don't know, going back through the trash and kind of looking for some juicy nuggets? Well, we got a lot in this story from the New York Times talking about Tom Brady's relationship with flamed out and failed exchange FTX, which is currently going through
by an established company. But again, these products generally die out and they don't do well, just from what I've seen over being a shock jock the last couple of years. Jen?
Yeah, I was speaking to someone who worked at Meta recently and asked what their perspective was on everything that was going on. And they said, like Mark Zuckerberg, is obviously very smart, recognizes trends very quickly, and he moves really quickly. And we saw that, when there was the threat with Snapchat, when there was the threat with TikTok, how Instagram was able to adapt to that and offer new features to get users to stay on Instagram for longer. Facebook is still the largest social media app in the world, followed by YouTube, and then I believe it's WhatsApp and Instagram. Facebook owns 3 of the products I just mentioned, and so if anyone is going to do it, I think it will be Facebook. But at the same time, I think they have, an uphill battle to actually get users off of Twitter, out of that environment, into a whole new environment to recreate that same culture. I think is going to be an uphill battle that I don't know if Facebook has really done that. They've just kind of acquired things and copied things. Sam, what do you think?
Yeah, I mean, before we transition to the next story, the only thing I'll say is that I think a lot of the talk has been in terms of winner takes all, and I don't think it's going to be a winner takes all sort of a thing. If Mark Zuckerberg makes his platform more of kind of a mindless sort of scrolling, interesting, fun experience, whereas Twitter, if it stays kind of in the more, well, I don't know. Twitter's also, it seems like, trying to move in that direction under Elon rather than the more social graph oriented, trying to, be on top of news type thing. We'll see what happens. I don't think it's winner takes all. They'll both kind of divide into their niches over time, or one will disappear. Who knows? But yeah, maybe to move on to this next story, which is a complete unrelated thing, back to crypto tech. Chainlink is the story I wrote. I think I published it yesterday. So Chainlink is this Oracle network. What they do is they bring blockchain, or they bring data from off of blockchains onto blockchains. And they do this through an ostensibly decentralized network of oracles. We wrote this story yesterday that's basically about how their proof of reserves product, which purports to bring proof of a crypto custodian's reserves from the real world, from these custodians, from companies, onto blockchains. We talked about how that Chainlink product, in keeping with the mold of how Chainlink is built, doesn't actually do anything to it seems, bolster the credibility of those core proof of reserve claims. So proof of reserves was this big thing that's been around for a while, but became much, much more important with the collapse of FTX as stablecoin providers who back their tokens with real world assets, and exchanges like Coinbase and Binance had to prove to users that they had as much money in custody as they did, as they claim to have. But there's lots of different ways to prove your reserves, and none of them are as transparent as a actual blockchain would be. And Chainlink, despite its marketing, might not, improve upon that. But there's caveats, and we can get to those. Does anybody want to comment on this way different story? Will, let's go to you.
I'll snag it. Yeah, the Chainlink story is interesting because it talks about like these things called oracles. Oracles are essentially price feeds, and they also have other types of oracles that allow you to look at reserves of assets. And oracles basically just report, right? They say this person here holds this thing in their wallet, and then they distribute that information to a lot of different projects. In DeFi, we see oracles used for price feeds in order to like have liquidations or lending protocols work correctly. And then when it comes to proof of reserves, we often see these oracles say, hey, this person has X amount of money in their wallet. You can use them. You can trust them. The issue with all this, and the issue with everything between cryptographic proofs in the real world, is that you have to have some sort of trust assumption there, right? We have to trust that someone is actually putting physical dollars in a bank vault somewhere, and that cryptographic proof can somehow read those dollars that are physical. And you can't really do that, right? Like you can't merge these two worlds. That's what makes Bitcoin so interesting, right? Is because the fact that Bitcoin is purely digital and it's purely cryptographic. You can always audit the reserves immediately just by running a node. A lot of these other platforms, these DeFi platforms, at the end of the day, they're using real world assets that you can't quite verify. Like at a certain point, you can't quite do it. And you can come up with schemes to make it better or more interesting or allude to it being safer. But at the end of the day, it's like, I'm sorry, you can't get a computer to read this because it just doesn't work that way. Different worlds. Jen?
All right, we are going to leave it there. You can read Sam Kessler's story on Coindesk.com. Thank you for watching The Hash and for listening to us. I'm Jen Sanasi. We had Wendy O, Will Foxley, and Sam Kessler on the show. We'll be back again tomorrow. Same time, same place. We hope you all have a great afternoon. Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-hosts, Emily Parker, CoinDesk's Executive Director of Global Content, and the TIE Director of Content, Lawrence Lewitton. Good morning, guys.
Morning.
All right. Before we get into our show today, let's take a look at what's happening in the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 30,608, briefly creeping up above 31K, back down at the time being. Let's see if Ether is following the same trend. The CoinDesk Ether price ETX index is at 1,902, following directionally the same trend as Bitcoin and DeFi assets. The DFX CoinDesk's DeFi index is at 118. All right, let's get to our first guest. We're going off to Hong Kong. The jurisdiction is pushing to become a major Web3 hub, with the government recently establishing a task force for promoting Web3 development. Joining us now is Animoca Brands co-founder and executive chairman, Yat Su. Good morning, Yat.
Hello, how are you? Nice to be here. It's actually more like good evening here, but anyway, it's nice to be here.
It is our morning. It's your evening. We're just a global show. It's wonderful to have you. Now, you're among 15 people in that task force. Animoca Brands is headquartered in Hong Kong. Talk to us about what your role is going to be.
Well, it is what it says, right? The role is basically to help promote Web3 development in Hong Kong. And the role entails just local development, but also to bring in overseas talent. I mean, there's already, thousands of individuals and companies that are now looking to apply for licenses or setting up shop in Hong Kong in areas of Web3 development. And I think the other thing that's fascinating is that this isn't just a government initiative. It's also trying to bring in private enterprise and bringing in basically companies like ours that know something about the space and driving the space. I think it also demonstrates Hong Kong's really goal to be the Web3 leader, not just actually in the region, but in some ways, given some of the, I guess, less friendly actions happening in other parts of the world, I think there's an opportunity for Hong Kong, and that's what they see as well, to become a global leader, really, in the development of Web3, crypto, blockchain, and digital assets. And that's really part of our job to basically help make Hong Kong stay relevant and to continue develop basically, progressive frameworks as Hong Kong has done so far.
Given your experience, is there going to be a focus on bringing business from the gaming sector, the DAO sector over to Hong Kong?
I mean, that's certainly one area that we're going to support, but it's basically everything. Web3 covers DeFi, covers, everything related to crypto, covers exchanges, and of course covers non-fungible tokens, gaming, also education, as we're doing most recently, and other forms of, basically culture as well. So it's the whole gamut.
So if you can, this particular task force, what do you think the long-term effects will have on mainland China? Do you think that this serves as a model or a potential a laboratory, if you will, for the mainland to change its policies? As you talked about regulatory crackdowns, if you will, on crypto in many countries, including the United States. But will this ultimately change the mainland's mind with how it deals with crypto?
Well, I mean, we just have to look at the lens of what happened just a few weeks ago. In early June, Hong Kong announced basically that it allowed for retail trading for 16 cryptos that are out there. And just around the same week, Beijing came out and put out a Web3 strategy paper and specifically said that, Web3 is the future of the next sort of iteration of the internet, and China has to lead in that area. So that's one. And then, of course, on national TV, as in CCTV, they were broadcasting about the development in Hong Kong and the fact that you can buy Bitcoin there. And this went across basically every Chinese sort of citizen in the national broadcaster. So, you could say that maybe it's just a very interesting coincidence, or the other perspective is to say maybe this was not so much of a coincidence after all. Hong Kong has always been a sandbox for China when it comes particularly to financial services. And when you think of Hong Kong's role in the past, it's always been the gateway for the development of the financial services in and out of China, right? The FDI that goes from foreign investment into China often routes through Hong Kong and vice versa. It's, you don't have sort of free exchange of, for instance, foreign currencies in China, but you do have it in Hong Kong, which is basically, a renminbi clearinghouse, as an example. And so we expect the same thing to happen in digital assets and crypto as well. And of course, the other thing is that, for China, there is a wider theme around that, which is, given everything that's happening in the US, there's sort of two themes, and this, by the way, isn't just for China. It includes places like Japan, Middle East, and even Europe in the same lens. One of them, of course, is dependency on the dollar. So really strengthening, crypto, one perspective is to say that it's sort of a broader attempt or a broader move for, sort of a form of de-dollarization. That's obviously one, I guess, agenda that sort of serves, I guess, various interests. And the second one is also to sort of really think about it, reduce the influence of dominantly American technologies, right? If you think about what's happening in the Web2 space, the whole world, for the most part, with the exception of countries, including China, is dependent on US-based technologies, whether it's Facebook, Amazon, Microsoft, Google, Apple, you name it. And that actually is something that is risky from an American, from a national sovereign perspective as well. So all of these sort of agenda items come together to try to, and there's a very strong reason why you want to develop and promote Web3, not just for Hong Kong and China, but also in Japan and Korea and in the Middle East and Southeast Asia and many other countries.
Yeah, it's so great to see you. So I want to just dig in more to this Hong Kong question. So Hong Kong actually, in some ways, seems very similar to Japan in the sense that both are sending very welcoming messages to the crypto industry, in stark contrast to some countries that shall remain unmentioned, like the United States. But when you kind of scratch beneath the surface, and I don't say this is not a bad thing at all. This is not meant as a negative judgment, but both of those jurisdictions, Hong Kong and Japan, are not easy. In fact, I think they're going to be very, very different.
Today noise as we're trading through this range, We're currently on the higher end of the range, but the range generally does have a positive slope to the upside, and that's been shown in the both trend indicators. For June, we primarily had Bitcoin as a positive trend, whereas as Ether was a mildly initially a neutral indication to a slightly positive. Now that's full positive. So both of them currently are pointing to strong positive trends in the market. So we have the Bitcoin trend indicators. Also thinking about more macro indicators. We have sort of two offsetting effects currently. So we're starting to see rates rise again, both real yields and nominal yields. This morning, actually, the 2-year U.S. 2-year was about 5%, the 10-year about 4%. Which are on the upper end of the range. That's been a bit risk negative in the market, and we've actually seen that this morning with Bitcoin selling off a bit from last night's rise higher. But that's offset with credit spreads that are still tightening, which is risk positive. So those sort of offset each other. The bigger elephant in the room is the inverted yield curve. We've been inverted since last July. That's generally a 6 to 18 month out indicator. It's the most inverted since the early 80s, and it continues to invert. So that is
going to happen any day now.
Exactly, any day. We've got a clock over our heads in this market. So it's a matter of when it strikes. When does the yield curve strike? It's been a leading indicator for all but one recession since the 1950s, I believe. So TBD on that. It'll be interesting to see where we go with that, and part of that will have to be the monetary response going into that recession, as to where crypto goes from there.
Todd, thank you very much for joining us this morning.
Thanks for having me.
That was CoinDesk Indices Head of Research, Todd Groth. Coming up, Latin American crypto services provider Ripio has been approved to operate in Spain. We speak to the CEO after this short break.
Excitement, and I think that will change when there is more price activity. What I do see is there is a lot more common use of this technology, and not just speculation.
Thank you very much. We're going to have to leave it there. Thank you so much for joining the show.
Thank you for having me.
That was Ripio founder and CEO Sebastian Serrano.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
FTX said in a legal filing that BlockFi's bankruptcy proposals are an abuse of bankruptcy rules, with $1 billion of disputed transactions at stake. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk State of Crypto newsletter. For the love of God, you need to subscribe to this thing. Good morning, Nick.
Good morning.
Okay, so FTX, they bailed out BlockFi last year, back when we thought FTX was the white knight that would save crypto. Oops. Anyway, what's going on now with BlockFi's proposal, and how are these two connected still?
Yeah, so a few months ago, BlockFi put out a proposal for really trying to fill out how some of its claims could be organized, or some of the debts that it owes other parties could be organized, and trying to set up a voting schedule for the different types of creditors, right? This morning / yesterday, FTX filed an objection saying that under that proposed BlockFi schedule, the funds that BlockFi owes FTX might not be properly repaid. Basically, to your point at the beginning, where FTX is alleging this is an abuse of the bankruptcy system. FTX appears to be alleging that BlockFi is seeking to get out of that particular, those particular debts by, through its filing and through the bankruptcy process.
And, we see in our favorite comic villains for crypto, 3AC and SEC, they're objecting to this. What's going on? Why are they so upset, the two of them?
Yeah, so 3AC's got a similar concern. It says that BlockFi owes it more than 200 million, 220 million, and it's concerned that it might not be able to object to certain fraud allegations or issues like that. The SEC's concerns are a little different. It's more focused on, some of the language of the actual proposals. And it's similar to what we've seen with the SEC's opposition to, for example, Voyager's, Chapter 11 bankruptcy process. That's more procedural. It's more focused on making sure that, in the SEC's view, that the appropriate individuals and parties are, given the level of responsibility that they should have, meaning, they want to be able to, investigate management. They want to make sure that management is not released from any, certain liability claims or anything like that. So three different objections really, but following similar, threads of what we've seen before.
Nick, thanks very much for joining us this morning. We will see you tomorrow.
I will.
That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover today. Thank you to Nicole, host Emily Parker, and Lawrence Lewitton. We'll be back same time, same place tomorrow. You're watching CoinDesk TV. Welcome to the Hash on CoinDesk TV. You may be listening to us on the CoinDesk Podcast Network if you're not watching us, but either way, we love you and we're happy that you're here with us today. I'm Jen Sadowski. Joining me today, Wendy O and Will Foxley. We're going to get right into the news of the day. Will, you got our first story. Some new developments with those ETFs.
Yeah, $3 Wednesday. I'm in a weird box today, so I'm watching this. Apologies for that odd angle, but we're here. That's all that matters. Valkyrie Digital Assets has refiled an application for spot Bitcoin exchange traded fund. Of course, they already have a futures Bitcoin exchange traded fund on the NASDAQ, so this follows up on top of that one. They've refiled using the Coinbase surveillance agreement that was first noted or at least whispered with BlackRock. The SEC went back to all these people who had filed ETFs and said, we need you to name whoever's in the surveillance agreement. So now all those refilings have begun, with Valkyrie being one of those. Of course, the market is earning on a lot of this news. Bitcoin peaked to $31,000 over the weekend, and some pretty strong evidence that I think there might be a spot ETF in the future for Bitcoin. Wendy, I'll throw it over to you for your take.
I feel like BlackRock was playing 4D chess the entire market, because wasn't BlackRock the first one to kind of kick this trend off when it came to filing for Bitcoin spot ETFs? And they, the breaking news was that the BlackRock Bitcoin Spot ETF was rejected, when in fact it wasn't rejected, it just needed to be modified. But I feel like they purposely left that area blank for the SSA, for their central intermediary, and they kind of needed to wait for somebody to clap back, and then everybody else kind of followed suit. So I think it's very interesting that they named Coinbase, considering that Coinbase is currently going head to head with the SEC. And again, at the end of the day, I'm not a big fan of a Bitcoin ETF because I feel like it's going to continue to make Americans more lazy, and we're not going to safely custody or even need to learn how to safely custody Bitcoin. That's another argument. But at the same time, I also think that it's very interesting that they picked Coinbase considering all of the drama that's happening. And I'm really here for the tea. This is probably the best novella I have ever seen recently.
It kind of is a novella, Wendy. So Coinbase being named in this, I think, was a surprise to everyone, given that the SEC came after Coinbase in their lawsuit. But they're being named as the surveillance sharing partner in, I believe, all of the ETFs that refiled, right? So BlackRock refiled, listing Coinbase as the partner. A few others followed suit. I believe almost all of those on that graphic that we see on the screen there. But according to BlackRock's filing that came in just a few days ago, Coinbase has represented 56% of the dollar to Bitcoin trading on US based platforms. And that's why BlackRock chose. I feel like BlackRock is leading the way. I feel like and this is just feeling, I have no information. It feels like BlackRock must have some information. And that's why they issued this filing. And then it feels like everyone is just following what they do. And all the analysts in the market are saying that they are hopeful that this ETF comes to fruition. Of course, like Will mentioned, Bitcoin is holding above $30,000. I have to mention Canada has had an ETF for a very, very long time. And so all of this excitement, I don't know, Will, is it going to fizzle away once this ETF gets approved, if and when it does?
Yeah, maybe. I mean, the one thing I want to go back to is talking about, like, does BlackRock have information that other people don't? And I actually sort of want to push back on that because I don't think they do have more information than others. Like, there's a lot of people out there who've been filing these ETFs for years, but they've been going up against an SEC that didn't want to see this product go through. What BlackRock does have is political edge, right? They have like the clout, they have the size, and they have the politicians in a lot of ways. A lot of people use BlackRock. BlackRock is one of the largest issuers, if not the largest issuer of ETFs. And so for them to look at this market and say, like, we want an ETF probably means that there's probably been the ability to have an ETF in this market for a while. Coinbase has been around for quite a while. It's been a public company for over 2 years now. It made sense for BlackRock to step in when the timing was right for the product, not necessarily just because they have more information than other people. And the surveillance sharing agreement, that maybe was like an edge that other people didn't have. But at the same time, those things are not uncommon either. And I'm frankly a little confused why people didn't come up with that earlier, if that's all they really needed was some sort of surveillance agreement on market manipulation. If you go back to like the earlier ETFs, that's always been the critique, is that the Bitcoin market can easily be manipulated. But if you have this agreement, maybe there's a way around it. Wendy?
But like, this is the thing though, like everything is so heavily manipulated, especially traditional finance and all the insider information that goes along. And I guess that it's like the SSA is like this public facade that they have to do as lawmakers or public servants, but isn't it kind of silly? And I feel like the reason why there wasn't an SSA listed in the first place is because the SEC has literally gone head to head with every single crypto exchange in America for one reason or the other. And the lawsuits are just pretty hilarious and frivolous at this time. But I think that that's why they didn't list it initially, is they probably didn't want, I don't know. I feel like they were waiting for the SEC to respond, and that's probably an internal conversation that went down, in my personal opinion.
Yeah, I just want to point out quickly that in previous filings, Will, and you can correct me if I'm wrong, it's taken the SEC much longer to respond with feedback. Here, we had BlackRock file, we had a few other firms file. The SEC came back, said this is inadequate, and they had the chance to make those amendments and file again. I don't feel like we've seen the SEC respond so quickly in the past.
No, I think you're right there. I think it sort of depends on the sort of filing that we're being done. This one, it was like sort of a quick note being like, hey, you guys need to share the partner with this surveillance agreement. And so they were able to refile pretty quickly. But overall, the SEC has taken forever to get back on these things, which has delayed any sort of push with an ETF, right? If you put an ETF into the market and then you have to wait forever for the SEC to get back to you, well, basically just spending millions of dollars on lawyer fees and not having any revenue in return.
All right, let's leave that one there. I'm sure we'll have more ETF news for you tomorrow. But let's talk about 3AC and some comments that were made on a Twitter Spaces. So 3AC founders will apparently donate future earnings to creditors who lost money after the hedge fund imploded last year. This is according to what Kyle Davies said in Twitter Spaces on Monday as a response to a question about the optics of him and Suzu working on a new crypto exchange from the beaches of Bali while 3AC goes through liquidation. Davies described the plan as a, quote, shadow recovery process outside of the liquidation proceedings. He also said that some early creditors have already been made whole. Wendy, I heard that big sigh of yours. So what are your thoughts on these comments?
Well, I don't like to get bit twice in a row. And I think that I feel like everybody was a bad actor. I prefer in that particular situation with the entire crypto contagion that happened. It was just kind of tiered levels of who was worse than the other. And I don't know. I just wouldn't want to do business or be a part of anything in relation to these type of people. And I feel like there's a lot more time, or people should be a lot more patient and wait for some of the lawsuits and things to play out before you use products or services from people. And that's a very important aspect of fundamental analysis that I feel like a lot of us in the crypto industry fail to use or even think about. I wouldn't use a product by somebody who, has a particular type of pass or that I'm getting bad vibes from. And I know that sounds kind of off, but I really, like after everything that's happened, I would just be really cautious using anybody's product that's done something not so good in the past.
Yes,
yeah,
go ahead.
Go. I was just going to say, to Wendy's point, we always say, do your own research. And part of that do your own research is looking into the people behind the project. You look into what happened at 3AC. And Wendy, I think your comments make complete sense. I want to point to this quote from a spokesperson for Teneo, who is the 3AC liquidator. They said, the founders of Three Arrows have willfully ignored multiple requests to assist with this process after initiating the liquidation themselves. And the court records paint a clear picture of the ways in which they have hindered creditor recoveries. Just hearing that quote from the liquidator and comparing that with some of these comments made on the Twitter Spaces doesn't really feel like they jive. But Will, I'll pass it off to you.
Yeah, the whole article here is pretty interesting. This comes from a Twitter Spaces, Martin in the Fall, so it's interesting to see these characters jump into that boat. Martin in the Fall, of course, is like blowing up on Twitter Spaces right now and becoming like a pretty influential media figure. And for him to like invite these two on is interesting in and of itself. Sort of talking about like where the nexus of media is going. For Kyle Davies himself, I think, again, like another tone-deaf answer. And he's sort of leaned into this, right? Like he's tweeted a lot of pictures of him fine dining, being in Bali. He's had some quotes to New York Times about like touching grass too much. You can only do so much for yourself. Like he's not really a character that people like. And he's sort of leaning into this villain thing, right? And so I think for him to go out there and talk about, hey, it's okay for us to do this creditor thing. You'll get paid back eventually. I don't think a lot of people who are millions to billions of dollars are going to like especially enjoy hearing that bit. And the last bit on it is like the plan doesn't really make sense, right? Often in crypto, you only struck lucky once, and to do it twice, especially after having such a bad track record, would be pretty outrageous. I agree with the creditors here, and I agree with the liquidator. They need to fall into line with that and start liquidating their assets accordingly. Wendy, over to you.
Why don't people in crypto take advantage of PR? Like, I feel like crypto PR is used inappropriately or not the correct way. Like, they use PR for marketing purposes of their like actual company, when in fact, like they should be using that for themselves and hire like a team of marketers to help on that aspect. But if I was this particular person that was deemed as a bad actor, I wouldn't be flexing any type of wealth. I would literally just be begging for apologies. Like, I don't know. I just think that people do very cringy things. And
I'm with you, Wendy. He said in the Twitter Spaces, there's a connection between the new venture and creditors. And he says that creditors are going to be able to benefit from this new entrepreneurial journey. It feels like he's using this as like a way to promote open exchange. I just brought it up now. We're talking about it now. And a lot of people have said this new product, honestly, if brought to market by anyone else, it is one that could do well, and the tokenization of bankruptcy claims is an interesting way to look at these. But I'm totally with you on that one, Wendy.
Sorry, my nose was itching like crazy. That's why I'm like.
I thought that maybe you were making that face as a reaction to the story, but we will leave that one there. We're going to take a short break, and when we come back, a blue chip NFT project has hit 20-month lows. I got rugged by Control. They're telling you who it is. It's the Bored Ape Yacht Club. But on the other side of this break, we're gonna maybe speculate on why and what's going on. Stick around.
Welcome back to CoinDesk TV, The Hash. I'm Wendy. We have Jen and we have Will in a very, very small box today, but you guys can't see him right now. You'll see him soon. But we have to cover the story because it is all the rage on NFT Twitter. So, Bored Ape Yacht Club NFT floor price sinks to 20-month low. The floor fell to about 27.4 ETH, which is equivalent to approximately $58,000 on a Sunday. This price has not been seen since October of 2021. And then we pumped to all-time high. But again, we are in a bull market. We're currently in a bear market. Data from CoinGecko shows the floor price hit 153.7 ETH in April of 2022. And again, guys, we were in a different market. OpenSea said Basie, I guess that's how the cool kids say it, has experienced a decline in the average price, reflecting on a wider cool down in the NFT market. And the other top collections, including Moonbirds, Azuki, Doodles, have also experienced dips recently. And the Basie floor price has risen back above 30 ETH since then. Full disclosure, I own a mutant ape, free and clear, that I traded to get, and I will keep him or her forever. I think that this is just typical bear market behavior, but I want to get Will's opinion on this because he's an Ordinals guy.
I am an Ordinals guy.
Will's our NFT expert these days.
He is. Totally.
I am. Jen, you relinquished the throne to me. It's kind of sad. You had it, scotch clear. No, this story is sort of emblematic of the whole NFT market and very similar to the ICO market, I think, in 2018, 2019, where a lot of these people made these huge projects. They promised a lot of things, and over time, those fulfillment of those promises couldn't be made because they were too big, too grandiose, and the underlying product itself was oversold. We saw that a lot of these Bored Apes went up to as much as like $500,000 as a base floor, and the idea was, hey, let's build a whole ecosystem out of this. We can make games, we can have celebrities involved, we can make restaurants, all this sort of stuff. That's a lot of stuff. It takes years to make, and only part of it became true. Even if you don't like the artwork, even if you don't care about that, there was a lot of promises for just being in this community. And those things take time. And if you're not able to fill it fast enough, well, it's a very liquid market. So you can just opt out of it very quickly. And I think that's what we're seeing right now is people deciding, hey, I'd rather have the ETH. I'd rather have the USD than be a part of this community. So I'm going to jump out of it. I think that's the same thing that happened with Azuki when it sort of messed up its launch 2 weeks ago or a week ago. They didn't meet the expectations of the community. And now they're going to have to suffer the price retaliation. But Wendy's shaking her head, so I'd love some feedback.
So the Zuki thing was just it was literally just a cash grab. Like these 10,000 generative AI pieces, they're not art. Like that's not why NFTs were created. They literally did a copy pasta of their original collection, probably to pay for the party that they had from what I'm seeing. Also too, there's a lot of liquidations and I think it's Blur. I don't use Blur, but you're allowed to take loans out against your JPEGs, et cetera. And I feel like that's what we're seeing a lot of is a lot of people took out these loans and took out these positions and didn't anticipate floor price to drop this low. And we've seen this happen in the crypto markets as a trader. This is not something that's necessarily uncommon, but when you add more of a trading aspect to NFTs, you're going to see these types of things happen. So not only are people opting out, people probably were not taking profits in the bear market, and they probably were over leveraged, and it just didn't work out well for them. Jen?
Wendy, you set me up for some facts I found while I went digging this morning. So people are actually pointing to NFT trading platform Blur as maybe one of the reasons as to why this is happening. So some of the information I found while I was digging around was, Blur created this trading frenzy with its tokenized incentives. So they're focusing in on these tokenized incentives. Bored Ape Yacht Club was one of the most traded collections on Blur. Traders were bidding and trading in really high volumes with the aim of collecting more tokens. I think there was even a double token incentive that happened in April or May. And now reports are saying that many lost money in the trading frenzy and then had to sell at losses. And so that could be one of the reasons we're seeing kind of a same trend across some other blue chip projects. So this doesn't look like it is unique to the Bored Ape Yacht Club. And I think it's interesting as we get these new mechanisms to operate with in the DeFi world, we may see some interesting things happen with NFTs. Well,
Sad stuff out there. Yeah, gotta be an Ordinals fan. Get some subscriptions. It's the next wave of NFTs, and they're built on Bitcoin, so they're way better.
I was going to quickly point to this tweet that I thought was really funny as I was digging for information. This person says, imagine walking into a watch store and seeing 10 dudes repeatedly chuck all the Rolexes back and forth at each other. That's what it feels like logging onto Blur, seeing how farmers are treating these luxury digital assets. I thought that was kind of funny and a great way to visualize why maybe new buyers aren't aping in to the Bored Ape Yacht Club. But Wendy, I'll give it back to you for last word.
Last word is, and we'll answer this on the next show when we cover ordinals. Do you think if the ape owners inscribed their apes on as an ordinal, do you think that would potentially help? But don't answer now.
Next time. But no.
There we go.
I don't like Bored Apes. I don't know. I think they're lame. Okay, let's go to the last story though. Let's talk about Pepe.
We're not talking about Pepe today, Will.
We're not talking about Pepe?
Done. We're not talking. Do you want to talk about Pepe? We got 1 minute. It's going to be a speed round.
Pepe 2.0, baby. You can still buy Pepe and get rug there as well. So I want to touch it.
That's the story. That's
actually the story in a nutshell.
Really quickly to the audience, if you guys are going to ape into any of this garbage, understand you're probably going to lose money. Please consider using disposable income and please consider taking profit like an absolute savage because this stuff is going to end up going to zero. That's all I have to say.
I agree with Wendy.
Be smart, people. All right. We are going to leave it there for a $3 Wednesday show. I'm Jen Sanazzi, Wendy O, Will Foxley. Always such a pleasure to hear your thoughts, opinions, comments, feedback. We'll be right here on the hash again tomorrow at 12 p.m. Eastern. We'll see you then. Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi here with my co-hosts Emily Parker, CoinDesk's Executive Director of Global Content and TIE Director of Content, Lawrence Lewitton. Emily, Lawrence, wonderful to see you on this Wednesday morning. How are you both?
Great to see you too.
Yeah, it was quite a fourth.
Quite a fourth it was. Emily, welcome back. We missed you over the past 2 weeks. Where have you been?
I have been in Asia, which is a lot more bullish on crypto than the US. Completely different mood here. So we will talk about that in more detail tomorrow.
I look forward to it. All right, let's take a look at what's going on in the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 30,320, down about 2.3%, taking a little bit of a dive there on some Binance news that we'll be unpacking later on in the show. Let's take a look at what's happening with Ether. The CoinDesk Ether price ETX index is following the same trend, 1,901 this morning, down almost 3%. And let's see if DeFi assets are following suit. The DFX CoinDesk's DeFi index is at 118, also down almost 3%. This morning, let's get to our first guest here. Our first guest is taking over a new crypto derivatives exchange that was incubated within a crypto custody tech firm. Joining us now to discuss is Ankex CEO and former CEO of Genesis Trading, Michael Morrow. Welcome to the show, Michael.
Good morning. Thanks for having me.
Thanks for being here with us the morning after the 4th of July. Let's talk about Ankex. You started alpha testing last week and will begin with perpetual futures contracts in markets outside of the U.S. Tell us a little bit about this new venture of yours and maybe why you've decided to launch outside of the U.S.
Sure. I'm happy to do it. So I think, the events of sort of last year, I think kind of highlighted the importance of separating trading and custody. And Credo was the company that decided to incubate this exchange, which became Ankex. Credo, which operates in the crypto custody infrastructure space that allows users to self-custody their assets. It chose to build an exchange, a derivatives exchange, that is entirely sort of non-custodial. So relying on kind of Credo custody infrastructure and kind of highlighting the importance of separating out certain responsibilities. There's lots of other products in the marketplace that are trying to do the same thing, kind of unbundling the traditional CeFi model. And what Ankex does is, in an entirely non-custodial way, create a brand new crypto derivatives exchange that will offer the perpetual futures that you mentioned. And we're excited to kind of get this product out to the marketplace and to get users to start trading on it.
So, how does that work in a perpetual futures exchange? Because, obviously there's a lot of leverage involved in perpetual futures. At least that's the way we know and love them. It's essentially almost as if it's spot trading, but such short term. They're futures, but such short term they're essentially spot. So, how does it work custodial wise? Who's taking custody and is it are they doing, in this case, I think you're only using USDC, correct? So, correct. What's changing hands, if at all?
So collateralized margin, as you mentioned, Lawrence, is USDC only to start with. We will certainly add other collateral assets as we get on in the product roadmap going to the future, except the coins is certainly starting with the Credo wallets infrastructure, stay in the user's wallets at all times. So even after opening up a position or putting on an order on the Ankex exchange, the coins that are used as initial margin around kind of the perpetual future remain in the user's wallet. Now, that is locked. So it is unable to be withdrawn from their wallet, except that the assets never actually leave their wallet up until the time either there's debits and credits correlate to kind of the funding rate and how that operates, and or they decide to kind of close their position, or they're ultimately liquidated due to the position that they've taken and what happened kind of in the marketplace. So this entire aspect of this, the coins stay in the user's wallets up until the time when settlement ultimately kind of needs to happen. So the exchange does not hold custody at any time.
And that settlement is how many hours? It's 8 hours? How many hours?
Funding rate calculations are happening every eight hours, except the settlements are happening at alpha in every 10 minutes. So every 10 minutes, we'll see movement on chain of kind of the funding rates back and forth, depending upon which side of the trade you're ultimately on. And obviously, when you liquidate or kind of sell your position, that'll obviously happen instantaneously.
And what currencies are you using? Are you starting these contracts on? Is this Bitcoin or anything else?
So it's Bitcoin, Ethereum, and BNB are the first three assets that we're going to be trading during the alpha initial user testing phase. But we will be rolling out new contracts certainly over time and getting involved into the long tail assets. And we'll see lots of different contracts trading on ANKEX certainly over the next few months.
BNB is a little bit brave right now, isn't it?
It is, and I think that kind of speaks a little bit to the offshore nature of what we're doing here. And we decided to kind of get registered in the BVI to start with as a VASP license with there, and then kind of moving on to getting other licenses around the world. We are looking at the UAE next as a potential regulator of ANKEX and continue to upgrade licenses. The US is currently not really on our regulatory roadmap. It is probably 3+ years away. And I think kind of the reasons for it, I think, have been well covered on the show, but kind of the appetite for crypto, certainly in the U.S., and I think kind of the regulatory stance needs to change markedly before ANKEX can be there.
And Binance didn't have a hand in having you pick BNB?
No, they did not. That was just one of the three most heavily traded assets in crypto at the time.
How many users are taking part in the alpha?
So we're going to start relatively small. So we're in kind of the friends and family and early investors part of kind of the alpha testing. We'll certainly get a lot more excited because we do have about 17,000 waiting users on the waiting list that are wanting to get in and involved in using ANKEX. And so about a month into the alpha, we will start letting people off that waiting list, call it 100 to 200 a week. And then by the conclusion of alpha, the goal is to get to about 3,000 registered users on the platform. And we expect the end of alpha to kind of come around September timeframe. We will then be more free to kind of open it up into more of a formal beta launch in the fall.
What do your users look like? What is the demographic of them?
So naturally, because ANKEX was incubated through Credo, we are cross-selling ANKEX to Credo users first and foremost. So the Credo user base is about 87,000 wallet holders existing on the Credo platform, and about 400 of those are corporates and institutional accounts. And so from a dollars perspective, we certainly do expect kind of the corporates to be there, but from an account holder's perspective, we will certainly lean a bit more retail at the start as we kind of ramp up our products and contracts that we're offering on the exchange.
So just to sort of ask a bigger question here, right now, market, it depends on who you ask, but, there's been some negative headwinds, both in the market and regulatory headwinds. So, some would say this is sort of an interesting time to be launching something like this, right? I guess my question is, what gives you the confidence to launch right now? What are you seeing that makes you think that launching something this big at this moment of time will be successful?
Ultimately, and I've been in crypto now for over 10 years, and I know how difficult it is to sort of get started and ramp up and scale when the bull market is already here. So I do think it's important that we build and test in a market like this so that we are ready for the next bull market. Then I personally feel that next year will be a massive kind of crypto bull market. And our job at ANKEX is obviously build an exchange that can scale and deal with the load that'll certainly kind of come in a bull market scenario, and to battle test the exchange and the tech to be ready for that market. We cannot possibly launch in a bull market and expect to do well. So we need to kind of make sure that we're ready for it, and no better time to kind of get tested certainly than this year.
But what is the evidence that you're looking at that suggests that next year will be a bull market? That's sort of what I mean. Like, what are the factors that you're seeing or the elements that are seeing that gives you confidence that that bull market is going to come? Because that's definitely not the consensus opinion. Some people think that, but some people are like, oh, crypto's over. I'm going to go, just do AI now. So, what gives you sort of that? What is giving you that kind of confidence in next year's bull market?
I think certainly experience in the industry and having done this for as long, kind of knowing kind of the waves of market sentiment that come around, I think is certainly one. I think the macro picture, I think, is certainly another. We talked about a lot of traditional institutional investors certainly getting involved, but I've been in this space for too long to not know that like the Bitcoin halving is still certainly a market catalyst, certainly in my brain, as to what brings kind of investors' interest back into the table. And so I certainly expect that to be a catalyst for the leading up into the event and kind of certainly after.
You know, you said that the U.S. is not on your regulatory roadmap for at least 3 years. We've seen the SEC go after companies that are registered and licensed in different jurisdictions because U.S. Customers are on their platform. How are you thinking about restricting U.S. users or preventing that from happening with this new venture?
So ultimately, it comes down to, we'll do the obvious kind of IP geofencing type stuff to kind of prevent users that should not be accessing the exchange. But ultimately, on the AML KYC onboarding side of the house, is obviously look through to the ultimate beneficial owners of the company. So, there's lots of companies here in the U.S. that obviously have managers and people in the U.S. but have offshore entities in the BVI or the Caymans or whatnot to kind of run their hedge fund through. We will be certainly looking into who the ultimate owners are and trying to obviously establish whether or not those are legitimate companies that are located offshore or are just kind of setting up legal entities offshore to be able to trade on some of those venues. And we'll have to be tight as we possibly can here to eliminate customers out on the platform that should not be trading on it legally.
Now, we want to get your opinion on this tweet here, as you were previously the CEO of Genesis. And I need to caveat this. You were the CEO of Genesis before the company filed for bankruptcy. Gemini co-founder Kevin Winklevoss tweeted what he described as the final offer in the debt restructuring talks over the bankrupt digital asset firm, bringing months of negotiations and mediation to a head with a plan for $1.5 billion in forbearance payments and fresh loans. I need to caveat here, both Genesis and CoinDesk are owned by DCG. What's your reaction when you see this tweet?
So it has been, almost a year next month, certainly since I left Genesis, and I really have not been in touch with the folks at DCG and Genesis kind of this entire time. I think I've moved on, they moved on, so it's very difficult to know, except the fact that I will say that we're hoping for a resolution here. I'm certainly friendly with a lot of the people that are still remaining, and certainly just kind of hoping for the best outcome, certainly for DCG, Genesis, and for Gemini, frankly, so that the industry can ultimately kind of move on. But other than that, I don't have any particular insight into that particular tweet or kind of what's happening recently.
Yeah, and just one more on Genesis here. You were there for Luna's implosion, Celsius's 3AC, not FTX. What have you personally learned about risk through that experience, and how might you be applying that to this new venture?
For sure. When I left Genesis, and as I thought about what I wanted to do next, I certainly wanted the next thing I did to be about kind of crypto industry lessons learned. Where did we go wrong in previous years, and what can we learn from that ultimately as the industry looks to move forward and regain trust from existing and potentially new investors? And certainly separation of custody and trading is certainly one aspect of how to bring trust and transparency more back into the system. And so certainly doing things more on-chain, more transparently. And if the exchange is responsible for doing fewer things like Ankex, I do think it sort of allows for a bit more trust to be brought back into the system in a more crypto native way of don't trust but verify.
So how does ultimately, when we step back and you look at it and you say, okay, you're a centralized exchange, but you don't provide some of the things that we traditionally ascribe to centralized exchanges. Is this sort of a hybrid of DeFi centralized and centralized exchanges? Do you see that as being the future of trading in this world, or do you think that ultimately you're going to go more along the lines of DeFi here?
So I do think the hybrid nature of what we're building at Ankex, we certainly believe that the central limit order book and kind of the traditional CeFi order book and matching engine does provide kind of the best investor experience currently. At the same time, crypto has come a long way since the first kind of CeFi exchanges were created over a decade ago. When they first came online, there was no kind of custody solutions. There wasn't really a way to kind of custody your assets safely briefly. But obviously, lots of infrastructure and platforms have now been built to kind of allow for separation of responsibilities. And as you know, in traditional markets, we have the State Streets and the BNY Mellons of the world for custody. DTC handles settlement, and then the Nasdaq, the New York Stock Exchange, is responsible for price discovery, kind of sitting in the middle, providing liquidity. And that's what the ANKEX model is trying to do. We have the Credos on the custody side, and we will open up the platform to other EOA wallets. So other self-custody and DeFi wallets will be able to plug into ANKEX later this year. So that will open up our total addressable market to the MetaMasks and the Fireblocks of the world, so that anyone with a self-custody wallet can plug in and trade on ANKEX. And we're just sitting in the middle providing prices. And so I do think that this blueprint for how exchanges should operate is the way forward. And I do think that, the traditional CeFi, trust me, I got this, I think died certainly last year with the collapse of FTX.
Michael, thanks so much for joining the show this morning. It was a pleasure having you on.
Thanks for having me.
That was ANKEX CEO Michael Morrow. Coming up, we'll take a look at the crypto markets as we head into the second half of 2023. Stick with us.
Everyone's bracing to hear what the Fed minutes have to say. And as well, this is happening at the same time that the Nasdaq exchange has refiled its application to list BlackRock's proposed spot Bitcoin ETF, joining rivals in naming Coinbase as its surveillance partner. What does this all mean? Well, joining us now to discuss is Matrixport's head of research and strategy, Marcus Thielen. Marcus, welcome.
Hey, thanks for having me.
Glad to have you on again. So let's kind of step back a second here, because we have today we expect the Fed minutes to come out. And while that doesn't necessarily sound like it's something that will affect crypto immediately, nonetheless, it might give a sense of where people are seeing risk situations going. How do you position yourself over the next few minutes here?
Well, the next few minutes. I mean, we are, we're quite bullish. I think we came into this year being quite bullish, and especially, as you said, because of inflation expectations. I mean, it seems to me that the Fed is really turning. They're not really admitting it yet, but I think, inflation has dropped sharply, and I think there's no need to be as hawkish as they have been earlier in the year, because also the CPI is actually now below the Fed funds rate, so there's no need to really hike rates anymore. And I think the market has really sniffed this out. This is why tech and crypto has really rallied so strongly this year.
It has done all that, yet it seems that every time there's a camera on, Jay Powell keeps saying, "I'm going to raise rates." So it's sort of like I'm wondering if perhaps the markets aren't taking the Fed seriously enough.
Well, I mean, historically, right, the Fed has been, you can almost say always wrong, right? They always need to adjust, right? They were very late in really hiking interest rates when inflation was already sky high. They're just really, far behind the curve. And I think a lot of people looking now at, of course, the Jackson Hole meeting end of August for the Fed to kind of, change really their stance. But again, right, I mean, do you really need, do you really interest rates at 6% when inflation, year-on-year inflation has dropped to 4%, really from all the way from 9%. And, when you look at energy costs and everything that's really leading inflation, inflation is most likely going to drop to 2% this year.
If the Fed is always wrong, and yet, I guess the market is trying to expect them to be more rational, if you will. But if the Fed is always wrong, and they're seeing this and saying, you know what, we don't care if inflation is at 4%, our number is 2%, we're going to keep going until that happens, even if it blows up the world. I mean, it just seems like that's where we're headed. I'm still trying to grasp this idea that the Fed will act completely rational, if you will, or at least the way the conventional wisdom market consensus has been, and not what they're saying they're going to do.
Well, I mean, the Fed is trying to cool the housing market, but of course, even at these, high mortgage rates, the housing data still looks very strong. So I don't know if the Fed really needs to go and really try to break the market, right? In the end, I think, they have paused now, and they have consecutively hiked over the last 12 months. But, but the pause, they're really going to restart it. I think we have, of course, seen some central banks around the world, especially, in England. But England is very different, right? The UK has, of course, a very different inflation problem after Brexit and so on. So this is very different. And I don't think the Fed needs to re-hike again. And I think the market is just really, expecting this.
Let's talk a little bit about this weird paradox that's happening right now. You have the SEC cracking down, and then you also have, BlackRock, et cetera, applying for spot Bitcoin ETFs. What do you think BlackRock knows that we don't? I mean, it seems like they're probably not just doing this like on a lark, right? They probably have some sort of information or some sort of conviction. Well, how do you interpret this?
Yeah, they must be very confident around the market and the price surveillance aspect of their application. And I think this has been in the past really been the key point and being voted down. So I think the likelihood seems to be quite strong, and especially because they were running also some, like a private ETF for some of their private wealth clients. So I think they have enough experience, and I think they're bringing this to the table really in running like an internal, BTC ETF basically. And I think, they're going to get the applications through. And I think we have already seen how fast really the SEC has sort of like reacted and said like, oh, you need to adjust a little bit the application. They're doing this. I think they're working really together. And I think, the one lesson really from all these crypto bear and bull markets is really there are like, 420 million people who hold cryptocurrencies. And even after all these, debacles and bankruptcies last year and, all these crimes, basically, there's still a lot of demand for crypto. And I think the regulator has really realized this. I think the regulator is trying to throw a bone towards crypto industry, and I guess frankly speaking, and I think that's why they're going to allow this Bitcoin ETF, and I think they have already said around the world really that BTC is really like a commodity and should not fall under the security questions.
Marcus, this ETF gets approved, which it sounds like you have a positive outlook on. What do you think is going to happen in the markets?
Well, I think BTC it's just going to rally. I think there are various other factors as well. When you look at, there's around like $100 billion in gold ETFs. There's probably another, 10-15 billion in silver. Some other commodities. None of these commodities pay an interest rates or like a yield, but there's still so much money in it. And I think the other aspect, and we have done some work on it. We took basically BTC and like on a black lemon asset allocation model, and for diversification reasons. So suddenly, if you have an ETF, asset allocation managers can put it in their portfolio, have it for diversification. It's probably part of the alternatives in our view, not part of the the tech exposure. And I think suddenly people can really again put it in their asset allocation strategies and put it in the mix of ETFs that they can be trading.
You note that bullish Bitcoin investors are preparing for a seasonal surge. Tell us a little bit more about that and your expectations for July.
Well, July, the market is quite bullish, right? So you had, for example, over the last 11 years in July, 8 of those Bitcoin actually went up. But there's also a lot of other seasonal factors. Bitcoin actually has done really well in January, and it's happened 6 times, and 5 of the 6 times Bitcoin, continued to rally. The last 2 times it even doubled. So I think there's actually a really good period coming up for Bitcoin. And again, I think people forgetting about all these negative headlines, from the Binance SEC and Coinbase SEC lawsuits, and I think they're focusing really on the ETFs, and everybody's asking themselves how much money is going to come in, how long can it take, and the expectation is really that at the shortest it's going to take 45 days, or maybe it's going to take 80 days. But I mean, this is going to bring us towards the end of the summer, and I think people are preparing for it.
And lastly, analytics firm Blockschool says Bitcoin is no longer correlated to U.S. stocks. Do you agree with this?
Well, I mean, it's just math, right? I mean, you cannot really lie with math. I think, I don't think it really matters too much, right? I mean, there are different investors. I think, you can use Bitcoin for diversification and everything, but I think the demand is just simply there. And, as we have heard from Michael Morrow, I mean, there's still a lot of demand to set up exchanges and for people to trade some of these main tokens and coins and everything. So I think the demand is simply there. And I think the money will just gravitate to whoever, opens up the market for a really, protected way to get exposure.
Marcus, thank you very much for joining the show this morning.
Thank you.
That was Matrixport's head of research and strategy, Marcus Thielen. Coming up, a new report gets into the nitty-gritty of the illicit crypto ecosystem. We'll break down the latest developments right after this break. TRM Labs is out with a new report on the illicit crypto ecosystem. The blockchain analytics company notes that criminals are moving on from Bitcoin to other cryptocurrencies. Joining us now to discuss is TRM Labs Head of Legal and Government Affairs, Ari Redwood. Welcome to the show, Ari.
Hey, thanks so much for having me. Great to be on with you guys.
Yeah, thanks for being here. All right, let's unpack this report. One of the notable things that came out from it was that Bitcoin shares decreased from 97% in 2016 to 19% in 2022. Unpack this for us.
No, absolutely. Look, this is TRM's blockchain intelligence team really telling a story of a shifting landscape, right? You mentioned the 97% on Bitcoin in 2016. Now, down to about 19%, and it really mirrors the story of lawful activity. Right? You know, in 2016, Bitcoin was synonymous with cryptocurrency. And really over the last several years, we've seen this explosion of other chains and assets. And it's more and more important for law enforcement to have visibility on illicit actors who are using these chains as we've seen sort of the ecosystem grow and evolve.
Now, before we dig into some of the other stuff here, anything surprising that came out of this report for you?
Yeah, no, you know, I think there's a lot of really interesting facts. I think the shift, obviously, from Bitcoin to other chains is sort of the headline, but really it's, you know, we identify about 40 different categories of illicit activity. It's really important to note that, look, you're sort of like, you know, what we're doing is we're moving here into a new financial system where this is not about crypto crime, but it's about illicit actors using cryptocurrency to do sort of many of the same crimes they did in the traditional world. And we see fraud, right? We saw about 9 billion in fraud. To include Ponzi schemes and rug pulls and this type of activity. But really, we've also seen a shift in the types of crimes to sort of what I'd call sort of more existential threats, right? The hacks, 3.7 billion in 2022, many of those against, or the vast majority of those against the DeFi ecosystem, and many of those perpetrated by North Korea. So not only have we seen a shift from Bitcoin to other chains, but we've also seen this shift from sort of minor fraud, sort of from a law enforcement perspective, to the much more serious national security threats, whether we're talking about North Korea cyber criminals, whether we're talking about terrorist financiers, or whether or not we're talking about sort of ransomware actors, Russian language darknet markets. And we've seen a shift from law enforcement as well to be able to go after these actors.
Why leave Bitcoin, which is the most liquid market, to sell your illicit gains? Do other coins provide more interesting or more beneficial uses for criminals, relatively speaking?
Yeah, no, it's a great question. And I think what we're really seeing is, look, the ecosystem is being used for all kinds of different reasons, right? There are chains that process, you know, faster, cheaper payments. So we're seeing those used, right? We're seeing the use of stable coins more. You know, there's discussion in the report on Tether, on Tron, right? Where bad actors are needing to convert funds into stable coins that have sort of obviously that are pegged to the US dollar for more stability. You're seeing NFT activity, right, on Solana and Ethereum. We're seeing a lot of activity in DeFi. You know, I mentioned 3.7 billion in hacks. 80% or more of those were in the DeFi ecosystem. So we're seeing, you know, illicit actors attack bridges and DeFi protocols. So we've seen sort of the sophistication grow. A lot of this activity just can't happen on Bitcoin. So we're seeing the use of different chains.
Tether has seen a threefold increase here, more than threefold, almost fourfold, when it comes to being used in terror financing and the like. Why Tether? What's happening here?
Look, I think, first of all, Tether, really because of this idea of conversion to a more stable currency, right? That's essentially how it's used by lawful actors as well, right? Taking either whether it's Bitcoin or another asset and moving it into something more stable. And Tether is really just that. And when you're talking about Tron, they're looking for places that can process faster, cheaper transactions. So I think you're seeing that sort of confluence right there. But I think when you're talking about terrorist financiers in particular, I was a national security prosecutor for many years at the Department of Justice, and we often used to talk about terrorist financing. Unlike other crimes, you don't need a lot of funds to carry out a terrorist attack. So, when you're talking about, terrorists, you're talking about potentially sending much smaller amount of funds than what we're talking about in the North Korea context, right? Where you're a nation state actor trying to build a weapons program. So I think part of it is just sort of this, hey, we want to take funds and we want to send them in relatively smaller amounts. And that, I think, is why stablecoins, Tether in particular, is very useful in this context.
And who are the users here? Who are the big users of Tether in that regard?
So we've seen examples. Obviously we've seen just recently Israeli authorities seized wallet addresses associated with Hamas. Where Tether was involved. We've seen fundraising from Al Qaeda and ISIS. Potential connections there. So really across the spectrum.
And lastly, Ari, the report found that around $1.5 billion went to darknet marketplace focused on selling illegal drugs. We've heard this topic come up recently in various House hearings and various congressional hearings. Talk to us about if that number is increasing or declining from years before.
Yeah, it's interesting. I think we continue to see sort of the numbers increase around darknet markets, but I think that there's this very interesting kind of issue, particularly with the takedown of Hydra. And while we're seeing some of the numbers increase, we're also seeing illicit actors look to other darknet markets. I think one thing that jumps out when you talk about darknet markets is really sort of the Russian connection, either sort of Russia-based or Russia language or Russia-connected, almost the entire ecosystem. And, I think the illicit finance, ecosystem in Russia, whether you're talking about darknet markets or non-compliant exchanges, ransomware, Russia's really created this ecosystem of illicit finance, and it's recently sort of really turned to crypto as part of that sort of underbelly.
Ari, thank you very much for joining the show this morning.
Thanks for having me. Always really a pleasure.
That was TRM Labs Head of Legal and Government Affairs, Ari Redford.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Bloomberg reports that Binance Australia's office was searched by the country's financial regulator, and it wasn't for stray wombats. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also CoinDesk's State of Crypto newsletter editor. My gosh, if you don't subscribe to it, really, you're shaming your family. Good morning, Nick.
Good morning.
Okay, so Binance, another country, another continent, a whole continent is going after them. This time, granted, it's Australia. Not the most polite people in the world, but hey, they have a point, do they? What's going on?
Yeah, so according to the report from Bloomberg, Binance Australia was searched by the Australian Securities Commission on questions about how it's treating derivatives products and investors. So, a little bit of background here. The regulator had previously revoked Binance's authority to trade derivatives products. But what's kind of more interesting to me is we have this broader picture of, as you mentioned in your intro, this is not the first time a country's searched Binance's offices. Earlier this year, France, had regulators investigate and visit Binance's offices, and of course, we're seeing this kind of broader global, look at Binance more specifically. But all of these regulators are coming after Binance, or at least looking into Binance, on different types of allegations. They're tied to, how it's handling crypto products specifically, how it's handling derivatives products. In the U.S., of course, you have the SEC and CFTC lawsuits. So it's really interesting that there's just these different regulators around the world looking into Binance and investigating Binance on a number of different aspects of its business.
Nick, do you think there's any coordination here? I know the whole Binance crew thinks it's this vast conspiracy of nations, but I mean, did you see any evidence of any kind of coordination between all these countries that are, because we've seen quite a few of them, in recent weeks?
There might be some coordination for sure. We've previously heard reports that, the SEC, for example, has asked for assistance from investigators in the European Union. So there might be some coordination, insofar as that goes. It could also be that, the fact that the U.S., launched not one, but at this point, 2 high-profile lawsuits against Binance could have spurred other regulators to say, okay, well, this is the time, so let's get on it. To what extent there might be a coordination on this, I think it's hard to say.
Nick, what's Binance saying about all of this?
Well, Binance said in a statement emailed today that it's cooperating with the Australian regulators and it's working to remain compliant. And that's been Binance's position for a while now, that it's beefed up its compliance team and is continuing to try and remain compliant with the various regulations and rules that exist in the countries it's operating in.
And lastly, has the Australian Securities and Investments Commission released any information about the search or the ongoing investigation?
Not at this time that I've seen. So far, it just seems to be a no comment.
All right, Nick, we are going to leave it there. A spokesperson for the Australian Securities and Investment Commission told CoinDesk that its investigation is, quote, ongoing, but that it was, quote, unable to confirm or deny any operational details, such as possible searches. Nick, thank you very much for joining us this morning. It is always a pleasure. That was CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. And that's it for First Mover. Lawrence, Emily, thank you so much. Emily, wonderful to have you back.
Great to be back.
I'm Jen Sanasi. Thank you both. Emily Parker, Lawrence Lewitton, my co-host today. First Mover returns tomorrow at 9 a.m. Eastern Time. And in the meantime, you can catch The Hash Happy Canada Day, happy 4th of July, and happy Monday. You're watching The Hash on CoinDesk TV, or maybe you're listening to us on the CoinDesk Podcast Network. Either way, we're happy to have you here with us. I'm Jen Sanasi. Joining me today is Wendy O and Ben Schiller. How are you guys doing?
Doing good.
I'm excited for tomorrow. Excited. Lay around, have some wine, eat delicious food.
I'm also excited for that. We have the day off tomorrow and we are going to enjoy it. But until then, we have some news to get to. Wendy, you got our first story. What is happening on Twitter?
Well, it was a slow news week. Well, weekend, I guess, because a lot of people drop some big news on the weekends. But of course, Elon Musk had to stir the pot. He set up a new daily Twitter post reading limit. And basically, let's talk about what this means for crypto, because a lot of crypto companies have built their brand on crypto Twitter, same with NFTs. So apparently Twitter is temporarily limiting the number of tweets users can read per day, separate limits for Twitter Blue subscribers and unpaid users. So basically, Elon Musk wants you to buy a product or a service. Verified accounts limited to reading 10,000 per day. Unverified accounts will have access to 1,000 per day. Initially set stricter limits, but changed within hours of announcing the move. It was so funny because if you were watching him live tweet this over the weekend, he said, okay, we're giving X. And then he said, okay, we're going to give X times 2 and then X times 3. So it kept getting bigger and bigger. But it also looked like it appears that he meant the scrapping of large amounts of data used by AI companies to train language models, which power chatbots like ChatGPT and Google's Bard. If you don't know what data scrapping is, it's the pulling of information from the internet. And I don't know how I feel about this. I think it's a little bit ridiculous because it's really not helping with the bot problem. But I guess there was rumors about other things that were kind of happening. Jen, do you want to take over here?
Yeah, we've seen Elon do this before, right? Announce a big change and then amend that change and then amend it again on the fly and then say it's temporary. And so who knows what's going to happen next given the backlash that's happened. But Wendy, to your point, the data scraping seems to be the issue at the center of this. You know, a lot of big brands, advertisers, publishers use data scraping to measure sentiment, to see what people are saying about stories, about products. And so this is going to be a big hit on a lot of business, both I think within the crypto sector and outside of the crypto sector. What's interesting to me is Elon is the one who's out here announcing this. We haven't really heard from Twitter's new CEO, Linda Yaccarino. I would love to hear from her and find out how this particular change and other changes at Twitter are laddering up to the new strategy under her leadership. I think it's really interesting that she's come into the new role, and we haven't really heard from her yet. Ben, what do you make of everything that's happening?
Yeah, I mean, Twitter's a really important public square for crypto, long has been. And I think Elon's also been a kind of controversial figure for crypto. On the one hand, he's seen as a champion of projects like Dogecoin. On the other hand, he's a kind of a figure of too much control. And this is an example of a Web2 medium, Twitter, not really playing by the rules of Web3, which is supposed to be more democratic, more pluralistic. And I think there's echoes here of what happened with Reddit the other day, where they wanted to kind of make restrictions on the use of their AI, and people backlashed against that. And it's sort of a similar story here, where you have this kind of Web2 model that's supposed to be free, but turns out not to be free when people weaponize it for, AI purposes or API purposes. So I see kind of echoes of that from that.
I put out a tweet about this over the weekend because I think it's just kind of ridiculous. Like TikTok pushes ads, like light ads. YouTube pushes light ads. If you pay for YouTube Premium, you see no ads. Facebook pushes ads. Like all these companies push ads. So I'm just not really understanding his angle. I get the abuse of AI and all of that type of stuff, but really at the same time, it's been a problem on the platform for a long time, especially when people use bots. So I'm not exactly sure what his angle is here. I feel like he kind of is not necessarily cut out to run a social media platform. I love that we're more free on the platform. I love that a lot of things have been exposed regarding speech and liberty. But at the same time, I don't necessarily think Elon's head out for it. And the fact that we're not hearing from the current or new CEO says a lot to me, because Elon was so outgoing. He was so forward. And I feel like this person that's now taken over, she's probably going to embody what corporate America does and just sits back and makes decisions and not practice any type of good communication. That's kind of the vibe that I'm getting. I hope that I'm wrong, but I just don't see it playing out that way.
Do we think that people will now go to alternatives like Blue Sky? I mean, there was some stories over the weekend about that.
No. I finally got my Blue Sky invite the other day, and Ben, thank you for reminding me, because I forgot to accept it. So I'm going to go and do that. Ben, to the sentiment conversation, I saw a lot of tweets over the weekend about people saying, like, where are we going to go next? Like, is it TikTok? Is it Instagram? I don't know if it's either of those platforms, but at least on my feed, there's a lot of people, looking for alternatives. Although my own opinion is that people aren't really going to go anywhere. They're just going to continue to complain and accept defeat. What do you think, Ben?
I think it's kind of Twitter or nothing. I mean, the problem is that, why would you go to a platform where other people are not? So people are still on Twitter, it's still where the conversation is. So I guess we just have to complain and bear it.
Wendy, we need to get you in on this. I know you have your fans on TikTok.
I mean, TikTok has a lot more users than I want to say, or active users, than I think any other social media platform. People have been all over TikTok for a very long time. I've actually advised multiple companies that I've consulted with, start a TikTok. The startup cost to market there is very affordable, especially when everybody was going viral, getting lots of views. Most of the companies didn't do that, and now they want to merge over to TikTok. And it's not necessarily that it's too late, but the algorithm, there's a lot more users there. Platforms a lot harder to go viral on. So I think that, there's different audiences on different the social media platforms, and we'll just kind of have to wait it out and see what happens. I mean, at this point, there's still rumors that TikTok could potentially get banned due to the Restrict Act. So we'll kind of have to wait and see how that plays out. I don't know. I haven't seen the rate limit thing been inactive, but it wasn't really clear that, like, if you're scrolling your feed, does that count as tweets being read? Or if you're looking at your mentions, does that count as tweets being read? It wasn't really like communicated well. So I'm still kind of confused if it's even happening. And I kind of feel like because of all the backlash, Elon's going to be like, oh, we're not going to do this.
I hope so. Ben, you have our next story.
Yeah, so my story is about two little announcements coming out of Hong Kong and South Korea, and they're both positive for Web3 development in those places. So first from Hong Kong is news about a task force set up by Financial Secretary Paul Chan, comprising 15 officials to try and find better ways to encourage blockchain technology on that in that territory. And the second one, probably more important, from South Korea, the National Assembly there has passed the Virtual Asset User Protection Act, which I guess is in the wake of Do Kwon and Terra Luna. Big scandal there. It's 19 proposals from lawmakers defining digital assets and setting up penalties for unfair transactions. And I think the bigger kind of context here, particularly relevant to the United States, is that it's a global market. The United States faces global competition from all kinds of places wanting to be crypto hubs. And of course, we have regulatory uncertainty here and no prospect really of comprehensive crypto regulation, at least in the short term. So I think we're going to continue to see the US under pressure from these different locales setting up different regimes that are more favorable than what we have here. So watch out the US.
Ben, I think your take on this is exactly right. To see different countries really embrace crypto, make clear regulation. It's just like a stark difference from what's happening here in the US. Last week, we talked about the spot Bitcoin ETF filing. The SEC came out at the end of last week and said, those filings are inadequate. The asset managers who file need to go back to the drawing board when it comes to certain elements of it. We have the lawsuits against Binance and Coinbase, and it just feels like we're going around in circles while jurisdictions like Hong Kong, like South Korea, are making it easier for crypto companies to understand what's happening there so that they can comply. Wendy, I see you laughing over there because it is just such a laughable matter. So we got to get you in on this.
I mean, I tell my audience this all the time. Every single time a public servant makes a decision, every single time they breathe, every single time they move, we pay for that. Our taxpayer dollars fund their salaries. And the fact that we are not getting the representation that we deserve, that we want, and we're wasting all of this time in this back and forth fighting over petty, ridiculous things is kind of embarrassing. I mean, I do believe that we're in a recession. I don't think that inflation is going to go down. I feel like America has a lot of problems. And instead of looking at different ways to raise revenue, to get people to pay taxes on their crypto assets, these companies, we're pushing all of this innovation out. We've seen this in the tech industry. I mean, if you look at California, we've pretty much pushed quite a few companies out of California, and we're kind of in dire straits right now. If you just take a beautiful walk downtown LA, the amount of homeless folks that you'll see. So I don't know, to me, it's just very upsetting. And if you're in crypto, if you're in NFTs, I think it would be a good idea to consider looking at other places outside of the country to relocate to so you can actually run a business, because we really don't know what's going to happen. And unfortunately, I don't think we'll see any type of clarity until after this upcoming election. And I am voting for whoever's pro-crypto. I don't care about the social issues.
Can I just make a quick plug? Last week, CoinDesk published its Crypto Hubs package, which was a list of 15 jurisdictions from around the world that we think are doing a good job of attracting crypto talent, crypto capital. And it was clear evidence that there's a lot more movement in those places than there is here. And it is a global market, and companies are really seriously looking at relocating, and the US cannot sit on its laurels anymore.
Ben, any surprising jurisdictions from the CoinDesk Crypto Hub list?
There were a couple. Vancouver was on the list, which kind of surprised me. And actually, New York was on the list, but I think for incumbent reasons, not for anything that's particularly done. But those would be the biggest surprises.
Yeah, I'm actually shocked that, because isn't a lot of crypto stuff banned out in Canada, Jen? Or not necessarily banned, but isn't it kind of murky, or they're starting to really crack down and not give you guys any types of guidelines similar to the US? Or
Canada is similar to the US. There are new regulatory guidelines that have pushed some crypto exchanges outside of Canada. Binance is one of those exchanges that decided to leave. But then there are other exchanges like Coinbase who remain very bullish on Canada. And a few unicorns have come out of Vancouver. So Vancouver is maybe a burgeoning crypto hub. But I would say that, when you look at what's happening in some of these areas outside of Canada, like Hong Kong, like South Korea, like Europe with their MiCA regulation, I'd say they're probably still ahead of us here in Canada. But I still need to celebrate all Canadian news. That's just my shtick on the show, especially after Canada Day.
It's good. No, I disagree slightly with Wendy. I mean, I think some regulation is better than no regulation, or what we have in the US, which is just a complete, what the hell's going on type of situation. So,
the only thing I do want to say is that I am very big on compromise. Like me personally, I can operate in a true decentralized economy. I don't need anybody coming in to rescue me or to save me. I have a very due to some of my life experiences, I haven't had the law ever really do anything positive for me or people that I've known. And I've actually seen terrible things happen. But I just would like some sort of compromise. I think compromise is important, and I don't feel that we're getting that in the US. It's just more so they're just shutting everything down. They're not willing to listen to the people that not only put them into power, but that are also paying their salary. And I think that's a problem that's not just that's not just selected towards crypto, but it's on all different types of sectors. I feel like the United States government has just gotten too big. The egos are too high. We need to establish term limits and all those other things. And I would love to see a happy medium, but I just feel like we're not necessarily going to get it. But
totally agree with that.
All right, we're going to leave it there. We're going to take a short break. And when we come back, an NFT project is launching a film. Find out which project that is after this break. Hello and welcome back to The Hash. Atrium, a network of artists led by former animators from Pixar, Netflix, and Marvel, is bringing one of the first animated films funded by a DAO to life. The Rise of Blues, a Nouns movie, has a budget of $2.7 million and aims to turn the NFT collection into entertainment. Joining us now to discuss is Atrium founder and CEO Supriyo Roy. Welcome to the show, Supriyo.
Hey guys, can you hear me?
We can definitely hear you. This sounds like an exciting time. Tell us about how the DAO is involved in decision making for this, because I think about the movie making business and there are a lot of different parts, and adding a DAO to it sounds like it's going to make it even more complicated.
Yeah, I think one of the really interesting things about the DAO, in particular Nouns DAO here, has been that they give you a ton of autonomy. So the creative directors are involved day to day. So they would share all of their core sort of major decisions back to the DAO, back publicly, even into the forum discourse and things like that, and including our Discord even. And we have windows of feedback. So you come in and you can share your feedback, criticism, critique, things like that. And within that time window, if you don't give it, you hold your peace. So that's how one of the ways we have been able to make progress and stick to our milestones and adhere to a certain quality. So it's not really too many cooks in the kitchen in that sense.
You know, when we think about traditional films, they usually have these massive advertising budget. They have actors who we know. They have characters who we know. How are you advertising the film, or how do you plan to advertise the film to people outside of the community?
Yeah, absolutely. I think one of the really unique things going here is something which we call internally as a proof of audience, because you have the DAO, because you have multiple sub DAOs and really enthusiastic community who's like getting behind it. You are not starting from scratch. So there is an organic word of mouth. People appreciate it. People being part of that production workflow makes the movie seen from the day one. So it's not being really created under wraps for 2 years and then coming out and, like you risk it, whether it's a hit or a flop. One of the things which we are looking at doing is, as we continue to go further down into the story, we will be exploring bringing more partners from traditional distributions and things like that to really go beyond our current core audience. And that's one of the things I think which is the beauty about the movie itself is it's trying to do is tell a really, really good story based on the public domain. It's not about NFTs. It's not about how it came to life. It's about the story itself. And if the story is good, people will care. So that's essentially the working thesis there.
So I have a question for you. My question would be, so because it's a film that's funded by a DAO and it's utilizing the Nouns NFT collection, so are community members NFTs participating in the movie? And if so, are they collecting like IP royalties, or how does that work?
That's a great question. So one of the things here is Nouns is public domain IP, right? So technically you do not need permissions to put a certain IP piece from the Nouns ecosystem into it. One of the things which we have been doing is intentionally sort of figuring out pathways on the story where we could include community members to submit for casting calls and submit for their own sort of unique cultural references, which we can include into the story. And, they wouldn't be blatant product placements. They need to fit organically in places where it would make sense. And then the things which we intend on doing is, because it's funded by the DAO, principally, Atrium and Nouns together would share any upside which comes from the movie in the future. Like, we are really early, as in the pilot has just been 4 minutes into a 80 minutes feature. So we intend that once the movie is complete and as and when it starts to accrue revenue, it essentially would be shared back with the DAO directly.
I love that.
It sounds like a great project. I love this. So if I buy one of these Nouns NFT today, can I still have some right to kind of have, a say over the direction of the movie, or is that still closed now?
Yeah, essentially, right? So I think one of the things there is Nouns, the way Core DAO itself works is Nouns is one at a day forever. Every single day you have one NFT going on an auction, and whichever the auction settling amount is, that goes back directly into the treasury. And your Noun is one vote on how you spend the treasury, right? So the movie work stream is just one of the projects Nouns has actively voted on and, continues to sponsor. And if you're particularly interested in influencing, how the story is being told, yes, absolutely. If you own a noun or you own a affiliated sort of sub-DAO community, you can come in and join and, actively participate in how we are working through concept stages and pre-production and things like that.
If the movie makes money, are the DAO members going to share in that revenue?
The DAO will, yes. So I think one of the things which we put out in Proposal 245, that was the kickoff of the movie, was that when the movie creates revenue for itself, we would do a split, whether it's a 50-50 split or a 60-40 split, we'll see. But principally, the DAO here is acting as production sort of financier. And they, if the film makes money, then that money gets back to the DAO. So the DAO has ability to recoup the cost. And then another thing which is really, really interesting is the movie crew is really agile and small, considered to a lot of larger animation productions. So a lot of artists have opportunity to share in that upside as well.
All right, Supriyo, we're going to have to leave it there. We look forward to seeing the full-length film. So congratulations on that and good luck on the rest.
Thanks a lot. Thanks for having me.
That was Atrium founder and CEO Supriyo Roy. All right, we are going to stick on the NFT beat. Our last story is a follow-up on the Azuki NFT saga that unfolded last week. A group of Azuki NFT holders is voting on the return of 20,000 Ether a week after the Azuki project faced backlash over the Elementals NFT mint. Reasons given for the proposed refund ranged from disappointment with the collection to the teams blatantly scamming the purchasers of the NFTs. The vote proposes to allocate funds retrieved back to a DAO to promote the growth of the community. Ben, I'm going to kick this one off to you. What do you make of this DAO vote to refund some of those people who feel like they were scammed?
Well, I was off last week, so I missed some of the drama here, but it does seem like a scam to me, and thank God they're returning the money.
We don't know if they're returning the money yet, Ben. The vote has been proposed, but I don't think we've come to any kind of resolution. But Wendy, you had a big sigh there. So what do you think?
I don't think it's a scam. I think what it is that there's a lot of grifting in NFTs. People build their NFTs around the ideology of community, and that's fantastic. However, releasing multiple generative 10,000 AI collections or whatever these guys or people are doing is not how you build a community. But it's kind of been like the culture in NFTs for a long time. I personally think that NFTs were, created for people to have ownership, for people to own their in-game items, for musicians to own their music, for people to own different parts that they participated in when it comes to films, et cetera, for writers. So again, these guys, they have a lot of money that they needed to pay for their community event that they had. We all know that parties are expensive. I don't think it's a scam. I think it's a disappointment. And I think that people should, kind of consider that NFTs are not, that it's still an investment. At the end of the day, you're putting your money into something. And if you're expecting a return, I'm not exactly sure what to tell you. So I don't know. I think it's pretty sad that they've kind of abused their community that way. But in the same respect, we're in a bear market, and I'm not really seeing a lot of innovation from the current NFT projects out there right now.
Yeah, just to give our audience a little bit of background, just in case you missed what happened last week, the Elementals NFT project kind of proposed the project was going to be something that people who bought in felt it wasn't. I think $38 million of Ether was spent on these NFTs. And then when the artwork was revealed, it was very similar, almost like a copy and paste of the original Azuki collection. I know we have a graphic of a side-by-side, there we go, of the original artwork and the artwork in the new NFT collection. This drove the floor price down. People were really upset, saying this is the exact same. It's almost like brand value, right? When you replicate something, the brand value of that original thing goes down. And now there's a DAO of NFT holders who want their money back. I think it's notable that the DAO has 72 members as of Monday and only 36 votes on the proposal. And 40% of those votes are coming from a single holder. So the story also kind of amplifies that DAO narrative of, like who is voting in a DAO? How are we ensuring that this is actually the voice of many people and not just a few? Wendy,
This is the thing that drives me absolutely crazy about DAOs, and this is what I've been screaming for a long time. I feel like DAOs are just a reproduction of the current system that we have in America. You have a couple people in power, even in other countries too, and they make all of the choices for you. If you were able to get early access into a project, or you have a lot of money, you get the say as to what can and can't happen. To me, that's not community. To me, that's not even really what a DAO is supposed to be. But again, you guys, we're still in beta. I think that things are still early, and I think we do have the opportunity to change the way things are done and essentially really level the playing field out as to how DAOs wanted it to be. But right now, nope.
All right. Yeah.
I agree with that. I think there's too many projects calling themselves DAOs and not really behaving like DAOs, or at least what we'd expect to be DAOs.
We're going to leave it there. We'll see you everyone on Wednesday. Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanesi here with my co-host, Lawrence Lewton, content director at The Tie. Let's take a look at what's going on in the markets this Monday morning, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is currently at 30,642, holding steady above